Artificial intelligence analyzes the market for me, and it does it really well. Right now, our program is getting its fourth analytical tool, a tool based on AI. Are you curious about it? Let's get started. Guys, welcome to another episode of Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and an altcoin chosen by you. We meet up and take a look at the charts from now four different perspectives: technical, on-chain fire charts, and now also AI. AI, which will provide automated charts that we'll be referencing here every week. If you see value in this, and I truly believe you do, because you won't find such condensed analytical knowledge anywhere else online, then be sure to subscribe. Also leave a comment, hit the bell, whatever you like, and remember that the content in this video does not constitute investment advice. For advice, consult a licensed advisor or simply do your own research. So if you're ready, grab your Kafka and let's get started with the analysis. When analyzing any cryptocurrency, you can't skip Bitcoin, and that's basically where we should begin. So let's take a look at the chart. We're checking what happened over the past week. We saw this ascending channel here, and there was a breakout from that channel. We determined that the range of this breakout could even reach between $100,000 and $98,000. So we were talking about this line, about this range that's between the line I'm marking now and the line you can see at this moment. And what turned out to be the case? Bitcoin stopped just above $100,000. Is that good news? In my opinion, yes. This is very good news because it shows that despite the summer holiday period, the demand for Bitcoin is very strong, and the basic technical levels that we see here on the chart are not being reached, simply because there are orders waiting there, and those orders are being picked up earlier. In fact, the purchases are already being picked up earlier by larger wallets, usually whale wallets, which we'll talk about when we discuss fire charts and ETFs, but let's leave that aside for now. Above all, we can see that Bitcoin bounced off that $100,000 mark and soared a bit higher. Currently, at least at the time we're recording this video, it's fighting to break through its previous all-time high and move toward a new one. If you were here with me a week ago, we talked about how in this case it's worth using Fibonacci based on the trend, to determine the range of Bitcoin's movement in the event it breaks above the ADH we've reached here, and that range falls between $119,000 and $121,000, so it's a very, very large range. This could indicate that a very strong upward move might soon occur on Bitcoin, but is that really the case? I'm approaching this with optimism, but also with a bit of caution, because there's also a possibility here of a symmetrical triangle forming. We can see that there was a very strong breakout to the upside, and now we're seeing a reaction, a surge upward. Here we can see that somewhere around the bottom, basically just below our previous all-time high, resistance is being set for the price. There is a possibility that there will be slight declines, which could reach somewhere around the area of $102,000. In that case, a symmetrical triangle could actually form. A symmetrical triangle, which, by the way, is very often the penultimate formation that appears on the chart during a strong upward cycle. By the way, if you'd like to read more about triangles, I encourage you to check out Kanga University. You'll find the link to the lesson about symmetrical triangles in the description of this video. So, is the triangle the most likely scenario here? Not necessarily, because the pattern currently showing on the Bitcoin chart is very similar to the one we basically saw during the last bull run in 2021, where the second breakout was just as sharp as what we're seeing here. We basically had a similar move twice, where we saw a strong breakout to the upside, a slight consolidation, and then a rebound back. Here again, there was a strong breakout to the upside, a slight consolidation, a correction, and then another rebound. Well, the declines that took place at that time were not as deep as the market expected. And similarly here, the depth of these declines is not the same, so a breakout from this perspective, from this point, is fully justified. All the more so because it finds additional justification in the indicators. Let's take a look at the RSI. The RSI didn't manage to hold the 50 level at first, at least not initially, but it did experience a kind of fake out, dropping below, grabbing liquidity, and then rebounding. So in this case, that's actually bullish. Besides that, it's worth looking at the MACD. The MACD, which basically formed a bullish crossover yesterday. We can see the first green bar on the histogram here, a very subtle one, and now we're seeing its continuation. So the indicators are telling us that there's a likelihood Bitcoin will break upwards again. And it's worth noting that at the same time, We don't see any divergences on the chart or the indicators, which is a very bullish signal. Besides that, it's also worth mentioning what happened on the weekly chart, because that determines which direction Bitcoin should be moving. And I presented such an analysis basically like I do every Monday, in which I point out certain aspects. These aspects, well, there are some bearish ones here, RSI, which on the weekly chart is gaining bearish momentum, because we have a kind of divergence here that isn't a classic divergence between the price and the indicator. Nevertheless, it is a momentum divergence, which is worth keeping in mind because such divergences in the long run also affect the market, either positively or negatively. At this moment, we are observing a negative divergence, so declines may occur as a result. On the MACD, we have a histogram that is currently oscillating downward, shifting our trajectory from bullish to bearish, but at the same time, a very interesting signal has appeared. I'm talking about a bullish candlestick which is only up by 0.1%, so very little, but this candlestick is known as a dragonfly doji. That is, a candlestick that most often marks the bottom of certain corrections and gives the impulse for the market to reverse and start moving upward again. To reverse. Why am I talking about a reversal? Because the previous candlestick from the week before was clearly red. So here we have the completion of the correction. And the most likely move is an upward one. And what do the fire charts show for Bitcoin? Well, here too we see uncertainty, but with a prevailing sense of optimism. I'll start with what's happening on the CVD. And on the CVD, we can see that the whales, which is our brown line, are not stopping their purchases. For several weeks now, we've been observing that they keep buying, which is often reflected in the behavior of ETFs. Besides that, the other market participants aren't particularly interested in buying at the moment. Even the purple wallets are currently pulling back and waiting to see what happens next. When it comes to support levels on the Bitcoin chart, we can see that the $98,000 level, the lowest point in the range we identified as a potential drop from the previously observed rising channel, is currently filled with buy orders, so there's still a chance that the price will fall to that area. However, I expect that this probability will decrease over time. But where does the optimism come in? Well, the optimism shows up very high on our chart. $120,000 for Bitcoin, and we see that only here do such important white as we see bars appear volume spaces which indicate high sales volume. Let me remind you, $120,000 is exactly the middle of the area we marked using Fibonacci as the zone that Bitcoin could reach in the near future in the case of a strong breakout above the all-time high, which it is currently struggling with. So, in this case, it looks very optimistic. But for the record, it's worth noting that along the way, we still have some significant resistance levels at $111,000. And here the volumes amount to 28 million in Bitcoin. These are waiting to be dumped onto the market. $28 million in Bitcoin waiting to be dumped onto the market. Then at $112,000, we have 33.5 million, and at 115,000, we have 35 million, so that's quite a lot. Nevertheless, the path upward is still opening up. If you like trading in uncertainty, well, Ethereum gives you the space to do that. Let's take a look at the chart. What happened with Ethereum? We talked about how we were dealing with an ascending triangle here, where the upper boundary of this triangle is defined by our supply zone. And here we have this upward trend line. And this upward trend line attention was broken after our last video. But if you regularly watch crypto market analyses, you know that one red candle doesn't make a downtrend, because confirmation is needed here. The confirmation would simply have to mean that either this candle closes 3% below our support level, or it's immediately followed by another red candle. In this case, that didn't happen, so we were dealing with a false breakout, a liquidity grab. This is very important, a liquidity grab. By the way, these are the areas where we said that declines could occur because we marked this zone even at 2,330 as a point where the drop could reach and possibly bounce back from. That happened here, maybe not in terms of price, but there was a false breakout and we've hit our supply zone. And pay attention, because this is where a lot of uncertainty comes in. Why? Because this supply zone has been tested multiple times as just that, both during upward trends and also as a demand zone when Ethereum was in a downward trajectory. That's why, in my opinion, unfortunately, it's a shame that yesterday Ethereum didn't manage to close a green bullish candle above this area, because that would have given me certainty that the move would continue upward. Meanwhile, the candle closing within this zone, lining up exactly with these peaks, tells me that uncertainty is appearing here. The uncertainty is somewhat offset by the indicators because we can see that on the RSI there's a struggle going on here as well. Just like with Bitcoin, we had a kind of false breakout downward below the 50 level. However, this breakout was shallower than what we saw with Bitcoin, which means we can see that the demand for Ethereum is a bit stronger. Besides that, it's worth taking a look at the MACD. Right now, as I'm recording this, the MACD is actually making a bullish crossover. And if this bullish crossover holds, there's a chance that the upward movement will continue. However, if the candle we're seeing today turns out to be a stronger bearish candle than what we're currently observing, then the histogram will turn red and that bullish crossover definitely won't happen, so confirmation is needed here. So far, we don't have it. In my opinion, resistance levels are, this is the golden rule, by the way, resistance levels are the areas where you sell, not buy. That's why we're waiting, at least that's what I'm doing with Ethereum, for a breakout above this zone, above this gray box, and only when that breakout is confirmed, whether by 2 consecutive green candles or by a retest of that area from above, will I be buying more Ethereum. For now, I'm just watching the market. We're seeing a lot more optimism through Ethereum fire charts. Let's first take a look at the fire charts themselves before we move on to the CVD, which is where this optimism is coming from. On the fire charts, we can see that there are some sell orders at the $2,850 level. Their volume is $6.6 million in Ethereum, waiting to be dumped on the market once that price is reached. So it's relatively little considering the current institutional demand for Ethereum. And it's worth noting that these are only the peaks that were actually set just yesterday by the price movement. So this is a barrier that's easy to break through, at least in theory. And we can see that there really is buying power here because practically all market participants, all wallets, are interested in Ethereum. I don't need to list them individually here. We can see they're on an upward trajectory and are buying Ethereum at this moment, so the pressure to break through the resistance is increasing, and it really looks very good. Lately, you've been choosing altcoins for analysis that, unfortunately, are hard to look at with optimism, at least judging by what's happening on the chart. Today, we have Algorand in front of us. ALGO, which in my opinion is right now touching resistance, and this could indicate that further declines may appear. What's more, the resistance is double. Let's take a look at what price ALGO is currently at. We can see here $0.20, 20 cents, a little above, and this is the area that matches up with the low that was set here. There's a low that's being tested from below in this case, so what we're saying here is that we're reaching an area that previously acted as support. Now it could become resistance. Additionally, on the RSI, we can see that there's a struggle to break through the 50 level. And as we know, 50 is the boundary between bulls and bears. As a result, there could be a rebound here. Nevertheless, on the MACD histogram, we can see that things look quite positive because the histogram is gaining bullish momentum, which could indicate that ALGO might break out upwards. However, in the case of ALGO on the MACD, if I zoom in, you'll see that there are a lot of false signals. One of them happened right here, another one just next to it, where we had a breakout, 2 days of really positive momentum, and then the indicator broke down. Here, it was similar, 4 days of positive momentum, and then the indicator broke down. So, in the case of Algorand, I can't really say that the chart looks particularly optimistic. I'd rather say that, personally, I'm currently staying away from ALGO. I do see some potential to trade ALGO within some broader ranges. Maybe I'll even show that a bit higher up. Since we've already analyzed ALGO before, we saw that gray box that ALGO liked to bounce off of. And that gray box starts around 27.5 cents. And these are the areas that, if there's positive momentum in Bitcoin is in good shape, ALGO could actually reach. However, in my opinion, there would have to be some fundamental changes with this cryptocurrency for that gray box to be broken through. In my opinion, ALGO looks weak and could drop to around 17 cents, or maybe even lower, to those lows that were set even around 15 cents. Algorand on fire charts also looks pretty average, I would say, because we see resistance appearing around 22 cents. So there is a slight potential for growth here, although it's hard to find any meaningful support levels, and those supports were, as we can see, for example, here and here. They had high volume, but they were also withdrawn from the market, which means, unfortunately, that the potential for declines in the case of ALGO is greater than the potential for growth. Moreover, we're seeing that buyer interest is rather weak, and the only wallets buying ALGO here are the red ones, and even they sometimes buy, but then often pull out of the market quite strongly. And these are wallets that hold between $10,000 and $100,000 in their balance, specifically to buy Algorand during times of turbulence. Well, in my opinion, as I said before, I personally am staying away from ALGO. And if you'd like me to analyze your altcoin, remember, it's a very simple thing. All you need to do is register on Kanga, check out the cryptocurrencies we have, and let me know in the comments which one you'd like to see in the next video. Just remember the 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be KNG. And third, it can't be any meme coin. You'll find the registration link in the description of this video, so you know what to do. Let's get to it. So what's the deal with this AI analysis and why is it so interesting? You see, on the Kanga channel, we present a lot of different analyses from many different perspectives, but we haven't had AI here yet. Why AI? Because the human eye can make mistakes and sometimes misses things. But with AI, basically nothing slips by. As a result, from now on, every week there will be a new type of analysis here that will tell us how specific altcoins listed on Kanga might behave in the near future according to AI analysis. And we can see 3 coins in front of us, or actually a sharp eye will spot even 6, that currently have some really strong bullish momentum ahead of them. I'll discuss 3 of them, ENA, which is Athena, Prime, and Lido. Athena is currently in an upward channel with a growth potential of nearly 37% in 23 days. That's exactly what the AI has just detected on our cryptocurrencies on Kanga. Besides that, Prime currently has a growth potential of over 35% within 26 days thanks to the symmetrical triangle it has entered, which gives it the potential to at least reach the upper boundary of that triangle. Lido is behaving similarly, although here we have a channel pattern, which means there's a chance that Lido could see a 32% increase within 24 days. So, let's be honest, that's actually a pretty decent profit. Besides that, what actually looks the worst on Kanga right now is Musk, AVAX, and Cardano. Mask, which unfortunately has a downward potential of about 96% over 75 days, because it's also in the channel. Avalanche, which has a downward potential of almost 66% in 64 days. Well, although I have to admit, I would actually argue with this analysis. I'll even zoom in on it a bit. Why? Because I see that when it comes to the upper boundary of this descending wedge that AVAX is currently in, AVAX has hit it multiple times, which could lead to a breakout soon. Well, maybe, actually, I just got an idea. Maybe someday we'll do a challenge where it's me versus AI, and we'll both analyze the market to see who gets it right more often, of course setting specific values and a specific time frame to reach those values. So if you're interested, make sure to subscribe because we'll definitely be coming back to this kind of content. And besides that, as the third cryptocurrency with downside potential, AI sees Cardano here, which has a 49% profit potential in the case of declines over the next 25 days. But you're probably wondering why I'm talking about downside potential when you basically can't short on Kanga. You can't open a short position here. That's true, you can't. At least not yet, because right now I'm getting ready for what's about to happen any moment now. Because very soon on Kanga, we'll have a futures market where you'll be able not only to go long, but also to short these altcoins that we have here. So if you're interested in this and curious about the potential for these cryptocurrencies to go up or down, the ones that I want to stress are available on Kanga. Make sure to subscribe and join me here every week to get the latest data. And if you'd like to learn more about this kind of analysis and once a week isn't enough for you, you can follow me on Twitter because I'll be posting this kind of content there more often. And now, a quick word about Bitcoin ETFs. Here, we can see that there's consolidation just below the all-time high. The price consolidation also indicates that there's a rotation of hands happening with the ETFs as well. We're seeing some sales with fairly high volumes, although they haven't pushed the price down too much. And at the same time, we're seeing purchases with volumes that are just as high, so it looks bullish. The rotation of hands is happening just below the all-time high, which means that a breakout is still very likely. On-chain analysis. And here we have 3 indicators, 3 critical deviation indicators that we often mention on Kanga, to check whether Bitcoin is actually reaching the peak of its bull run or not necessarily. We start with SOPR, and here on the SOPR chart, we can see that not only did Bitcoin defend the level 1 mark, which we talked about a long time ago, but it also soared higher and is still far from reaching the local peaks of the indicator. As a result, in this case, we can see that the growth potential on the SOPR remains very high. How does this look in the case of the MVRV superposition indicator after halving, which is also an indicator we've mentioned quite often, saying that most likely during the ongoing bull market it is heading toward reaching level 3? Because with every bull market, there is a certain gradation by one level. Well, in this case, we can see that even though the price is basically close to its all-time high, the indicator itself is still far from the peak levels of the current bull market. As a result, the growth potential here still looks quite good. And then there's NPL, which is an indicator you often ask about, net unrealized profit and loss, which has very precisely and very often marked the best selling points for us in the form of bull market peaks. We had these blue areas, which in the past were marked as such peak points. They start at the 0.75 level. Currently, the NPL isn't reaching those values anymore, but it's pretty close because back in 2021 it hit 0.74, so that's actually quite good. Currently, if we narrow down our chart, we can see that in this case the NPL is still staying relatively low, currently reaching a value of about, let's move it a bit, 0.55, so the growth potential remains very, very high. Many cryptocurrency market analysts claim that the Bitcoin bull run ended a long time ago. However, when I analyze the hard data, I emphasize that I believe that's not the case at all. But that's just my own subjective opinion. If you want to challenge my view and analyze the data together with me, make sure to subscribe and join me here every week. And now it's time for a contest. Let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video, from the main three, so it can be Bitcoin, Ethereum, or Algorand. Share your technical perspective, on-chain analysis, fire chart sentiment, fundamentals, whatever you like. And remember, you don't have to agree with me. The author of the most interesting comment posted by Friday at midnight will win 20 KNG from me. And the winner for the previous episode is Zbisik Kedziora, who analyzed Bitcoin. Congratulations, Zbisik. As far as I remember, this isn't your first win. Please contact support to claim your prize. That's all for today. If you enjoyed it and this is your first time here, you know what to do. Also, leave a thumbs up and a comment, especially letting us know if you like our new analysis, the AI analysis, and please rate this episode on a scale from 1 to 2 to 9, where 1 means it was weak, bland, and you don't want to see me again. 2, 9, fantastic, and I want more of it. If you want more of this, see you next week. Bye. Thank you.